So congratulations, revenue up 4% and profit did beat the two estimates in the Bloomberg survey. But what can you do to goose that profit? Why was it lower than last year?
Oh, thank you for having me. Look, first, I'd like to mention that this is probably the 15th quarter in a row where we improve every single metrics, whether it's top line, profitability, and net profit. Last year was a historical record year for the group, and Q1, as you mentioned, of this year is no exception to this. We've increased our top line by 4%, our EBITDA by 6%, and our profitability to 43%, and our net profit is normalized net profit is up 26%. We're in the region the most profitable operator with EBITDA margin at 43%, so we're very happy with our performance, and we're continuing on our strategy of very tough discipline in terms of operation and also efficiency on the asset side with our infrastructure play.
Yeah, I want to get to that, particularly the tower unit and the spin-off in a moment. But maybe first tell us what areas are seeing pressure.
We're not seeing any pressure. Actually, all our markets are up. Our customer base is up. We're in line with our guidance. We're actually beating our guidance. We've guided that we will try to reach 43 to 44% EBITDA margin for this year, and we're already in Q1 at 43% EBITDA margin. We're up 1% versus last year. So actually, we are delivering in line with performance. There was on actual profit a few provisions we've took, but apart from that, operationally, we're actually delivering ahead of plan.
Walk us through those spin-off plans for the tower unit. There's obviously a series of tower sales which might close this year and that would release cash. How is that process going?
So exactly last year we announced the establishment of the largest tower co in the region with Zain, where we merged and contributed all our assets in Qatar, Kuwait, Iraq, Tunisia, and Algeria with their asset of Iraq and Jordan. This creates a vehicle with close to 30,000 towers, an enterprise value of $2.2 billion with zero debt. So that's pretty much equity value. We've signed the transaction last year. We're going through the regulatory approval. We're very confident by this year to close at least two markets. We're looking, of course, to close Qatar first, and normally we should follow with a couple of other markets before the end of the year. So we're very confident with that process.
And the financial impact of the deal, when will that hit and what will you do with the cash?
So these will be subsequent closures. We were looking at a process that should last close to 18 months from now to close all the market. There is an equalization payment, which is roughly of $700 million of proceed for the Ooredoo Group. Currently, we'd like to close the transaction and get the cash before we think of how to spend it. We've been extremely disciplined over the past year. We've increased our free cash flow by close to 35%. We have a very robust balance sheet, and our net debt is down to 0.9 times net debt to EBITDA. So we have a very strong balance sheet, and we remain extremely disciplined but opportunistic.
Absolutely. You'll have lots of choices. So are there any new or maybe underinvested markets that you're looking at?
So right now, we're especially focusing on our infrastructure play. As you mentioned, there's this tower. We're also carving out our data center businesses. We finished the carve-out in Qatar and Tunisia. Kuwait should be completed by the end of this year. This will establish a data center platform where we've committed to invest up to $1 billion in the coming years in growth CapEx, because we're seeing tremendous growth on that side. On the cloud side, and now with the new anticipation of AI coming, we're seeing even future fuel to growth in that business.
Aziz, can I ask you about Palestine? You're one of the operators in the Gaza Strip. I know it's been very difficult to operate there. Can you give us an update on how your staff is operating there and whether they're even operating?
We're operating where we've been the operator, which remain constantly online in Gaza. The first thing I'd like to do is to salute and commend its staff and the people in Palestine. I have no words to describe their courage, their resilience, They've been managing to keep the networks up in the harshest of conditions. And we have no words, and we're in awe at Ooredoo with their dedication.
And you're able to continue operating both there and the West Bank?
Yes, we're operating both in Gaza and in West Bank. Of course, in Gaza, there are interruptions, but for us to continue to deliver that means of communication to the local population is extremely important. It's actually vital.
Let's move on and talk about Myanmar. You've been trying to exit. That process seems to be undergoing, a little bit of a delay because of regulators and so on. Can you give us an update on what's happening there?
So, yes, Myanmar, we've announced the sale close to nearly 2 years ago now. We are actually extremely confident that we should get to a close within the next few months or weeks, even. I would even say weeks. We're hopeful. Actually, the business on itself has been performing exceptionally well for the last 6 to 7 months. This quarter was up around 16% in terms of top line, but it's a market we decided to exit. We found a buyer, we signed a transaction, and we've been dealing with the regulators. As you know, the political situation there is not of the most stable one, and therefore getting the approval has been quite challenging.
You've been doing really well. You just laid out the numbers for us. It's been another great quarter. What about the rest of the year in terms of comparisons with maybe rivals or competitors like Etisalat, STC, and so on?
We have a different value proposition. Ooredoo had the benefit of having very strong, robust markets such as Qatar, Oman, and Kuwait in the GCC region with low volatility on the currency, but slightly lower growth. But we also have very strong growth engines such as Iraq, Algeria, and Tunisia. Just to recap some number, in Algeria, our top line is up by 16%, in Iraq by 14%. These are tremendous growth engines, highly dense population with a lot of youth and a growing middle class. So we think we have a balanced portfolio and a different value proposition.